Hey everyone, and welcome back to another video for today. In today's video, let's talk about a stock that suddenly popped up on everyone's radar over the past couple of days. Everybody was very bullish on it. And then over the last couple of hours, there has been a little bit more of a bearish sentiment around that particular stock because of something that company did over the last couple of days. The company in question is Webull, ticker symbol BULL. Yeah, that's quite a good ticker symbol, right? So Webull, right now market cap a bit closer to $7 billion, and the stock is up over the past month 21.7%, and actually over the past 10 days or so, it's up over 30%. Now, I'll explain the bull and the bear thesis here. I'll explain why also the stock went down 6.5% after hours. Of course, everything can change over the next couple of days when the market will open and we'll have that July 9 deadline, etc., etc. Now, the main thing here with Webull is that, well, for those that did miss Robinhood, they might say, oh, this might be the next best thing. But we've seen how these things work out previously, right? Oh, I missed out on Palantir, so let me check for the next best thing for Palantir. Maybe it's C3 AI, maybe it's Big Bear AI, maybe it's whatever, right? The next Robinhood is just Robinhood. Webull is just Webull. Does that mean that Webull cannot be a success? No. If they execute, if they do everything that they should be doing, then probably it will be a successful story. But to say that, oh, Webull right now, $13, market cap $6 to $7 billion. Robinhood, closer, I think right now, $80, $90 billion or so. I think Webull can do the exact same thing. Well, Webull will do the exact same thing only if Webull does what Robinhood has been doing. And that is growing every single quarter, extreme and rapid growth, great execution across the board. Can Webull do it? Maybe. Time will tell. But let's discuss everything you need to know about this company. Let's also compare to Robinhood. Let's talk a little bit about SoFi as well. So if you enjoy this type of videos, hit all the buttons, especially the subscribe one. Would really appreciate that. And if you want to support me even further, to check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so first up, a quick summary here that can be available to you on fiscal.ai, by the way. So Webull Corporation operates as a holding company for Webull Financial LLC and its subsidiaries, providing an online brokerage platform. It offers trading in stocks, ETFs, options, and cryptocurrencies through its mobile app and desktop platform. Webull targets retail investors, providing them with tools and resources for trading and investment analysis. So, the company primary products include stocks and ETFs, options, cryptocurrencies, margin trading. Webull generates revenue primarily through payment order flows, margin interest, securities lending, subscription fees, and interest income. Now, if we go on their website, they say that they are operating in 14 markets, they're licensed in 12 markets, and they have over 23 million registered users. More on that specific metric in a bit. And here you can see everywhere that they're operating in. So the Americas, Europe, Africa. So we have here United States, UK, Canada, South Africa, Brazil. As for, and I think they will be launching in the Netherlands, but more on that in a bit. Asia, the Pacific, so Hong Kong, Singapore, Australia, Japan, Indonesia, Thailand, Malaysia. So they're operating, of course, in markets where Robinhood at the moment is not and will not enter those markets anytime soon. Other than Singapore, I think, but only for crypto, if I'm not mistaken. Moving on here and talking a little bit more about the CEO and a bit of the structure of Webull. So this is the current CEO right now. So Webull was founded back in 2016 by Wang Anquan and began operations under Hunan Fumi Information Technology, a Chinese holding company. Wang hired Anthony as CEO of the US Webull brokerage that same year. I do believe that I've seen on LinkedIn that Webull Thailand has another CEO. So, okay, good to know. Now, Hunan Fumi Information Technology is a Chinese holding company that founded the zero-commission trading platform Webull. Webull operates as a broker-dealer in the United States and China and, of course, the other regions. Hunan Fumi Information Technology Ltd. is also associated with Xiaomi, a Chinese telecommunication giant. And by the way, the CEO of Webull, His education background is a BA in political science at Columbia University. What did he do prior to his position at Webull? Well, he was an international equity trading team at Credit Suisse, which pioneered the newly emerging electronic trading DMA and algorithmic systems of the time. He then became vice president of ING Equity Trading Desk in New York, and most recently was the CEO of LXM Financial, where he expanded the broker's business into DMA, which is the direct market access, customer trading, and foreign broker chaperoning arrangements. So of course, here you already have the folks that saying, oh, they are part of a Chinese company and I don't trust the CCP, etc., etc. Okay, fair enough. But for them to be operating in the United States, they are of course regulated by every regulatory body in the United States. So basically doing what a US company should be doing. Moving on to last quarter's results. So revenue increased 32% year over year, whereas total operating expenses actually decreased 2% year over year. They also had income before income taxes, net income, adjusted operating income. They've seen that customer assets totaled $12.6 billion, representing 45% growth year over year, driven by strong net deposits, which grew 66% year over year. They've seen registered users increase 17% year over year to 24.1 million users, but funded accounts only increased 10% year over year, and we'll talk a little bit more about that. Some of the highlights were as follows. They've partnered with Kalshi, the first CFTC regulated exchange with prediction markets, to offer our users the ability to trade binary events contracts on the Webull platform. So something we've seen with Robinhood as well. In March, they successfully launched Webull Premium, a subscription-based membership service that unifies the company's best-in-class products and offers an elevated investing experience for their users. As of May 15, Webull Premium had approximately 40,000 users, representing nearly $2 billion in customer assets. Good to have, and of course, again, resembling the Robinhood Gold. Subsequent to the close of this first quarter, Webull consummated its previously announced business combination, and its Class A ordinary shares, warrants, and incentive warrants began trading on the Nasdaq. In May, they enhanced the Webull advisory platform by partnering with BlackRock to offer model portfolios. And then here also in May, they announced their collaboration with Visa on the US platform, whereby Webull users can efficiently transfer money between their Webull brokerage account and external bank accounts through Visa Direct. So this was basically what has happened, which again, when you look at this, good execution, right? Good execution. This is the roadmap for 2025. So here they expect to launch Webull app in the Netherlands. So they're definitely growing outside of their already core markets, maybe more established markets. My big issue here, and I think that's the big issue for everyone, is that, okay, that's great, right? Registered users have increased 17% year over year. But the fact that funded accounts only increased 10% year over year, that's not great. Because on the platform, you can sign up and use their screeners. You can use a couple of extra things there for free. So, okay, it's great that you can attract new users. But if those new users never actually fund their account, then what's the point, right? Unless there are ways for Webull to monetize those accounts through, I don't know, advertising or whatever. But that's not the case. That's not why you want to buy a company like Webull. You want to buy a company like Webull because, yeah, people register to the platform and then they're funding their accounts, they start trading, you make money on their cash balances, etc., etc. So we would like to see this number grow faster than registered users, or at least quite close to it. Again, it's great to see it grow 10%, but I mean, the fact that registered users grew 17% makes this 10% not that impressive. Looking at customer assets and net deposit, we can see that customer assets, yes, did grow 45% year over year, but did drop quarter over quarter. They said here that the decline sequentially in Q1 was due to market volatility, basically saying that they took, I think it was 5% hit because, well, in Q1, the markets went down. Okay, then this is what happened. Net deposits, although that did increase 66% year over year, it's been already 2 consecutive quarters that net deposits have come down. So again, not a great trend to see even if that year-over-year growth is amazing. Because if we look at a company like Robinhood, for example, right? Because if you buy Webull because you think it can be the next Robinhood, then you would like to see something like this. You would like to see funded customers go up and to the right. Yes, of course, in 2022, 2023, it was quite slow, but then we've seen a solid reacceleration over the past couple of quarters. What we've also seen here is that net deposits, right? Net deposits for Webull, $1 billion, $1.2 billion 1 quarter before that, and $1.6 billion in Q3 2024. Look at Robinhood, last quarter, 18 billion, before that 16, then 10, 13, 11 billion, and before the big explosion here, that was 4.6. So even before the huge explosion in growth here, $4.6 billion in net deposits. Let's even look at another similar company here, eToro, right? Also pretty popular. Funded accounts increased 14% in Q1, driven by an ongoing user acquisition and retention, as well as the acquisition of Australian investing app Spaceship in 2024. So here as well, you had seen solid and steady growth, and then, some accelerated growth, but they even said here they basically acquired the Australian investing app, and so that did increase the overall funded accounts. Okay, always good to hear. And if we look here at the assets under administration for eToro, that increased 21% year over year. And here as well, you can see a small decline here quarter over quarter, but it did still increase 21% year over year, driven by growth in equities. That's for eToro. So here we have another company to compare it with. Moving on to the next slide. And here we see the daily average revenue trades. Or DARTs, that is. Trading related revenues increased 50% year over year on the back of volume growth and higher monetization. So I have here a split between equity revenue, option revenue, and platform and trading fees. Of course, the largest chunk here is quite clear, and that's the option revenue. And yes, DART has been increasing quite nicely as well. So monetization wise, they are doing what they should be doing at the moment. If we look at interest related income, here, yes, it has decreased a little bit quarter over quarter and even year on year. So the smallest part right here, that's corporate cash. Then we've got client cash, margin financing, and stock lending. If we look at the hit, where did they get hit? Right? What's the big difference here? It's basically this corporate cash did come down, and that's I would say the biggest hit, although you could say that maybe client cash took a small hit here as well. Interest related income decreased 4.3% year over year, mainly due to decrease in interest on client and corporate cash. Now, what they are doing quite well at the moment is this, right? If you look at adjusted operating expenses, OPEX basically stayed flat year on year, but as we've seen, they managed to grow the business. And I think if they can continue to do this, I think they have some operating leverage here. Now, what was the big issue? Well, the big issue was this. Webull announces $1 billion standby equity agreement. Subject to certain customary conditions, the purchase agreement grants Webull the option at its sole discretion to issue up to $1 billion in Class A ordinary share to Yorkville over 3 years. The per share subscription price Yorkville will pay for the shares will be a 2.5% discount to the market price, as that term is defined in the purchase agreement during each one-day pricing period elected by the company. Okay, when we first read this, I was like, you know what? It gives them the flexibility to raise money whenever they want. And of course, yes, Yorkville in this case will buy those shares at a 2.5% discount. At first, I didn't see any issues to this, right? I didn't see any issues here because it makes sense. We've seen other companies do this as well, right? This gives you the flexibility, the option to raise money whenever you see fit. Now, some people commented that, oh, Yorkville, red flag. And so I did some digging. For those that follow me on X, you've probably seen this already. So why should we care that this is Yorkville? Well, Yorkville is known for standby equity distribution agreements that let companies raise cash by selling new shares at a discount, which we've seen right now, 2.5%. This often causes massive dilution for existing shareholders and can tank stock's price. Some of the past issues here are as follows. First of all, Yorkville faced SEC fraud charges in 2012, which were later dismissed, but their SEDA model has a history of leading to poor outcomes for small cap stocks like Mullen, VinFast, and even Trump Media, though many factors were at play. So yeah, of course, when we all read this and posted about this and made videos about this already on X or on YouTube, well, this raised for some orange flag, for some a red flag, because Webull, which is doing quite well right now, why would it need, you know what? Forget about it. It gives them the option, right? It gives them the option to raise $1 billion whenever they want. That's great. But why go with a firm that already has a bad track record? Why do that? Is it because nobody else wanted to participate in this, which makes it even worse? Or is it because management didn't know or doesn't know, which I don't know which one is worse in this case, right? I just don't understand this move, right? Because if you are a great business, good management, you're doing well, you don't really need the cash at the moment, then okay, you do these types of things because it gives you the option. But why not choose a reputable firm? Why choose this one with a bad track record? I just don't understand this. Does this completely destroy the whole thesis here behind Webull? I don't think so. Of course, if you cannot trust management, then yeah, don't even touch it, right? Even if this can 2x in the next 12 months or so, right? If you cannot trust management, then what's the point? You're just gambling here. If you just gamble, just play blackjack or whatever, much better, right? Easier outcome, in a minute if you're going to double your money or not. So yeah, it's a shame. Does this, if I were to look at this and say, interesting investment thesis, would this be like a complete turnoff? No, but I would probably put way less money into that position than what I originally thought. Just plain and simple. And then with regards to SoFi, of course, we know that SoFi has SoFi Invest. And some people are saying, actually, shouldn't SoFi actually spend here $7 billion, $8 billion or so and buy Webull to expand and grow faster and maybe compete directly with Robinhood? To me, no, horrible idea. Forget about it. They don't need it. So to conclude, Webull, interesting company, interesting opportunity. Forget about thinking, oh, this might be the next Robinhood. Yes, maybe the market might push it higher because it might be the next Robinhood. But as you've seen, Robinhood has been growing much faster. The numbers between Robinhood and Webull are night and day, right? Night and day. But all that said, it is interesting, can be a market beater in the short run, right? Can be. In the longer run, it's all about execution. And trusting management's move. So that's about it for me. I know plenty of you actually use Webull and actually like the interface. It's very similar to a Robinhood. So I guess there's that. Some of you will probably hate it because, they compete with Robinhood and automatically it has to be a horrible company, horrible stock, horrible platform. I know how these things work. I know. So anyways, that's all I've got for you right now. Enjoy this type of videos. Leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.